What's up, guys? Welcome back to the channel. Johan Lorenzo here. The current state of the stock market is a bit shaky, to say the least. The rumors and articles going around about the Fed losing control on inflation has put a bunch of stocks down to their 52-week lows. And if you're a long-term investor, there are some pretty good deals for you to take advantage of. In today's video, I want to share with you guys a new dividend stock I just added to my portfolio. And before the video's over, I want to go over the insane week we have ahead of us here in the stock market. We have a huge week of earnings ahead of us, and if you have any money in the stock market, you're going to want to pay attention to this. So without further ado, let's get into the video. The dividend stock I just purchased and added to my portfolio is JP Chase, ticker symbol JPM. JP Chase is the largest bank in the United States with a balance sheet total of $2.87 trillion. Right now, the stock is around 126 bucks and it's sitting close to its 52-week low of $125. As you can see, the stock was sitting around $173 just a few months ago. Year to date, they're down 21.5%, which puts them well into bear market territory here. With a current market cap of $372 billion, the stock is dishing a dividend yield of 3.15%, which means you're gonna get paid $1 for every share you own every time they pay a dividend. And right now, their dividend yield is 20% above its 5-year average. Their payout ratio is a very comfortable 29%. 29% of their profits go to us, the investors, and the other 71% they keep for themselves to continue growing, expanding, paying debt, etc. Looking at their dividend growth rate, they've been increasing their dividend for over 11 years now, and they've been consistently paying a dividend for over 12 years. And as you can see in the chart, during the housing market crash of 2008, they cut their dividend and started rebuilding it shortly after those first couple of years. If you own shares of JP Morgan, you will get paid in the months of January, April, July, and October. The company is also buying back a ton of shares. I believe close to $30 billion or so is going to be their next share buyback. Their total sales are also looking pretty good here, nothing too crazy. So during times of inflation, it is usually a good idea to buy bank stocks. And I say usually because as long as that inflation is under control, bank stocks do pretty well. But in a situation like the one we have today, it's a bit iffy because if inflation continues to run rampant, banks are pretty much screwed because we will end up going into a recession. If inflation is under control, banks will continue to make money. A 3% interest rate on an auto loan that turns into 5%, that's fine. Banks will make money off that higher interest. Now, this is where that bucket of salt comes in. If inflation spirals out of control, a 10% interest rate on a car loan will do the banks no good. People aren't going to be out there buying and financing a car with a 10% interest rate on it. It's just not going to happen. The demand will simply not be there. So let's talk a little bit about the huge week we have ahead of us here in the stock market. This is a huge week of earnings, and I don't care what you're investing in. Some of these companies need to report good earnings or it's going to affect everybody. There are a lot of big names here on the chart for the week. Coca-Cola, 3M, Chipotle, Waste Management, McDonald's, but the ones I'm most interested in are UPS, Microsoft, Amazon, Visa, Apple, and Google. Guys, most of these are huge companies that have been getting wrecked lately. And if we get a case of Amazon, Google, Microsoft, and Apple missing earnings, the market is gonna sell off like you've never seen before. We need to see some of these big names put up good numbers because if we don't, the entire market is going to come down with them. I'm very curious to see what Amazon and UPS put up. It's going to give us a lot of insight on what the next several months are going to look like. If e-commerce is slowing down and people are spending less money, I think that might start throwing us into a little bit of a recession. Let me know down in the comments below what you guys are planning on doing over the next several months. I'm in this for the long term, so I'm going to continue to tiptoe around and buy shares little by little, so that way I can at least secure some of the deals, but also still have enough cash on the sideline for if it were to go lower. So I'm going to continue buying a couple shares every week in the meantime. If you haven't seen my most recent portfolio update, click on this video right here. I want to thank you all for watching. I'll catch you on the next one. Peace.